today's episode of Heard and Seen Around. I am Rajesh Kazhipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
We spend the first half of life trying to grow up and the second half trying to remember why we did. Every motivational quote sounds better until you try applying it on a Monday. We chase productivity as if boredom isn't the birthplace of every good idea. The biggest mystery of modern life is how everyone's calendar is full, but nothing ever gets done. We wanted flying cars and world peace. We got faster emails and subscription renewals.
The Japanese yen is falling faster than my willpower in front of sushi. At 150 to the dollar, it's flirting with 30-year lows, and the Bank of Japan is stuck in a classic economist nightmare. Raise rates and you bankrupt the government, keep them low and you bankrupt the currency. Japan's debt is now 240% of GDP. Basically, every citizen owes two of themselves and their neighbor. The Bank of Japan owns half of it, which is like owing money to your left pocket and calling it policy. Now, as they try to taper bond buying from 3.5 trillion yen to 2 trillion yen a month, markets smell blood, demanding higher yields as a debasement premium. So yes, gold bugs, Swiss francs and doomsday preppers are having their moment. The BRICS are quietly ghosting Uncle Sam and not even leaving a breakup note. India's US Treasury holdings are down 8% to $219 billion, joining China, Brazil and Saudi Arabia in the great de-dollarization drift. But before you throw a funeral for the dollar, here's the twist. Advanced economies like the UK and Belgium are buying more. So while the BRICS are diversifying, the G7 crowd is basically saying, relax, we have got this. Still, the message is clear. The world's biggest borrowers are now being judged like dodgy tenants. Sure, you pay rent on time, but can we trust your currency? As the dollar index wobbles near 100, the greenback's global dominance isn't dead, just getting a little more competition. Call it the dollar empire strikes back, but with higher yields and more drama. India's UPI seen in September 2025 looks like a two-horse race, with the third one barely trotting. PhonePe reigns supreme, handling nearly half of all transactions by both value and volume. Google Pay is a strong runner-up at around 35%, while Paytm, once the poster child of digital payments, now barely holds 6% by value, proving nostalgia isn't a business strategy. Tiny players like Navi and Supermoney are in the picture, but only if you zoom way in. Together, PhonePe and Google Pay now control over 80% of India's UPI traffic, a duopoly so tight it could make the telecom sector jealous. So yes, UPI is going strong, but competition not so much. It's less a digital payments revolution and more a fintech monarchy with two kings and one very nostalgic code gesture. The US stock market is officially in main character energy mode. It's now worth a record 67 trillion US dollars, about 220% of the US economy itself. That's like a house being worth twice your lifetime income and still getting bid up. For perspective, all of Asia is worth only $22 trillion, Europe around $19 trillion, meaning America's market alone is now 63% bigger than both combined. That gap has never been this wide in history. Tech giants like Apple, Microsoft and Nvidia have basically turned Wall Street into Silicon Valley's bonus round, while the rest of the world just watches the scoreboard. So yes, the US isn't just leading global markets, it's devouring them $1 trillion at a time. The Ford Motors of this era isn't in Detroit, it's in China, and it's called BYD. The Chinese automaker just overtook Tesla in global electric vehicle sales, and its overseas numbers are exploding. In 2025 alone, BYD's foreign EV sales have already tripled, surging past 6 lakh units. While Tesla is still the brand new Instagram, BYD's the one quietly filling driveways from Bangkok to Barcelona. Their strategy, not luxury, volume, cheap, efficient and everywhere. It's a full circle moment in auto history. America invented mass car production and a century later China's perfecting it with lithium instead of gasoline. BYD isn't just building cars, it's building momentum, one battery pack at a time. India's taxman is smiling, and with good reason. Direct tax collections are up 6.3% this year, hitting a whopping 11.89 lakh crore rupees, or nearly $143 billion. What's driving it? Strong growth from non-corporate taxpayers, that's individuals, HUFs, and small businesses, plus a drop in refunds, which always helps the headline look healthier. Corporate tax collections rose about 2%, but non-corporate receipts jumped over 10%, showing how resilient personal incomes and small enterprises have been in FY26 so far. Refunds fell 16%, which means yes, more cash stays with the government and less comes back to you. So while growth is steady, the taxman's efficiency is even steadier. Call it what you want, fiscal prudence, digital compliance, or just good old-fashioned collection hustle. If banks don't get deposits, how on earth will they give out loans? That's exactly what's happening now. Loan growth is sprinting ahead, up 17% at some banks like Bank of Maharashtra and Kotak, while deposits are jogging behind. And when banks start running out of funds to lend, they have only one trick left. Make saving interesting again. Translation, they need to raise deposit rates. So yes, that's why your fixed deposit suddenly looks a little more attractive this quarter. It's simple economics, tight liquidity for banks means fatter yields for savers. Call it banking 101. When money is scarce, your savings finally get a promotion. India's infrastructure story isn't just about bigger highways. It's about state capacity finally catching up with ambition. In 2004, India had 65,000 kilometers of national highways. By 2024, 1,46,000 kilometers. That's more than double in 2 decades. Proof that the bulldozers have been busy. But the progress goes beyond roads. From railways to renewables to high-tech manufacturing, India is slowly building the muscle for long-term growth. Sure, there's still plenty left to do, like expanding clean energy and cooking access, where India stands at 77%, well ahead of most neighbors, but not yet universal. So yes, it's still a work in progress, but this time the foundation looks solid. From asphalt to industry, India is building not just roads, it's building credibility. One thing though, as someone who spends a lot of time on Indian highways, it's high time we focus on quality as well. Here's a chart that will make Wall Street spill its coffee. Nvidia, the chipmaker powering AI dreams, is now worth $4.6 trillion, more than all the banks in the US and Canada combined. That's right, one GPU company is bigger than JP Morgan, Bank of America, Wells Fargo, Citi, Goldman Sachs, and every Canadian bank put together. To put this into perspective, the entire Indian stock market is just about 20% larger than Nvidia alone. And all Indian banks combined, roughly $600 billion, barely a side quest in Nvidia's market cap. It's a reminder of how the world's financial power has shifted, from balance sheets to silicon chips. Foreign investors have pulled out nearly $17 billion from Indian equities this year, making India the most sold emerging market in 2025. But before you panic, remember, this isn't a price crash story, it's more of a valuation timeout. After 2 blockbuster years, Indian markets are digesting their gains, consolidating in time and valuation and not collapsing in price. In fact, compared to peers, India's correction is more relative than real. FPI ceiling is heavy, yes, but it's more about global rotation and profit taking than loss of faith. With Q2 earnings looking steady, this could well turn into a sell the rumor, buy the news moment. So while foreigners are selling for now, domestic investors, they're just buying the dip and the story.